In this video, we are looking at the financial indicators. Our main focus will be on question number 2.3. The examiner asked us to calculate the following financial indicators for the year ended 29 February 2024. We need to calculate the percentage operating expense on sales, the stock turnover rate, as well as the interim dividends per share. So the first one, operating expense on sales. Why is the company concerned or want to know what's the percentage of the operating expenses on sales? The main purpose of the company being in business is to make profit. So they would like the operating expense to be very small when compared to sales. Why? Because the operating expense are being serviced by the sales the company generates. So if they're making or if they're spending less on operating expense, that means they will be retaining a lot of money for the company as well as the shareholders. So in that way, the company wanted this ratio to be as small as possible. So the first ratio, the company would like it to be small as possible because they want to make sure that they do not spend so much money of the money they are generating in the form of sales on the expenses. The second part is a stock turnover rate. We are trying to ascertain how many times per year are we selling our stock. In this case, we would like to sell the stock as many times as possible per year because it means our stock is attractive and the customers are willing to come and buy from us. So when looking at the stock turnover rate, we want that rate to be as high as possible because now it shows that our stock or the inventory that we are selling to the public, it is attractive to them, or it means that we are less competitive, or the competitors that we have, we're actually beating them in the market. So that would actually, the stock turnover will entail for the business when they start to analyze it. And then now the question is how to calculate the stock turnover. Your stock turnover will be your cost of sales, which you will get from your statement of comprehensive income over the average inventory. And how are you going to ascertain the average inventory? You're going to take your opening inventory balance, you add your closing inventory balance. So then your rate will be your cost of sales over the inventory balance. And then the last part, or the last one rather, it's interim dividends per share. How do you get interim dividends per share? In our question or in this paper, we are provided the interim dividends. We provided the interim dividends, and also we know the number of shares that we have outstanding. The number of shares that we have outstanding is the number of shares that we had at the beginning of the year plus the shares that were issued during the year. Then how are we going to calculate then this ratio? It will be your interim dividend as a numerator, and the denominator will be your total number of shares outstanding at the end of the year. So in our case, at the beginning of the year, we opened with the 1.2 million number of shares, and then during the year, we issued 400,000. If you add the two, our denominator should then be 1.6 million. Without wasting time, let us see what do we have in the marking guidelines, which shows the calculation of those three ratios. Now that we have the solution, let us see what we have. The first one was the percentage operating expense on sales. In order to ascertain that amount, we have said operating expense, that is as per the statement of comprehensive income, then we divide it by the sales, also in the statement of comprehensive income, then we multiply by 100. Then what the percentage that we will get? At 16.5%. Why is it 16.5%? It's because we were told in our instruction, round off your amount to the nearest one or to one decimal. That is why now you have only one decimal. However, the examiner seemed to be so lenient in this exam paper. They said they can accept 17%, meaning to say it was rounded off. That means you decided to take 5 and carry it over to the next side, and it became 17. The second one, it is a stock turnover rate. How did I calculate it? It's a cost of sales that is as per the statement of comprehensive income over your closing inventory plus your opening inventory. Then you will get 183,500. You get 2 marks just for bringing in this amount straight from what you have on the statement of financial position. And then because you're looking at average, you're going to have to then divide this amount that you have. So you basically times by 1.2 because you're looking at the average. Then what you're going to get 27.6 times. That means per year they are selling inventory 27 times more than inventory average that they have on their stock. Then the last one is dividends or interim dividends per share. The interim dividends per share, as I have already discussed, it is your interim dividends which we have been provided of 416,000 divided by 1.6 million, which is the number of stock outstanding. How did you ascertain the number of shares, ordinary shares rather, outstanding? You said what were the number of shares when the year started, which was 1.2 million. Then you added the 400,000, which was bought or was issued during the year. Then you have 1.6. And then when you say 416 or 416,000 divided by 1.6, you multiply by 100, then you get 26 times. So the examiner said if you bring in 0.26 cents, you're still going to get a mark. So you benefits of a doubt, you will get a mark. But you should always make your dividends per share to be in cents. That is the recommended way of calculating dividends per share. This takes us to the end of this question. Can you please follow me on TikTok? It's Economics 199. If you are listening from TikTok, can you please go follow me on my YouTube page? And it's also Economics 199. Also on my bio, you'll be able to see the link that will take you to my YouTube. Thank you. Bye.